Today we're going to take a look at one of the most popular forms of business entities, the LLC. Its official name is Limited Liability Company, and the name tells us a lot about it. An LLC provides its owners with limited liability of their personal assets. This basically means that the debts, judgments, and other obligations of the LLC are not the responsibility of the owners. They are separate. But note, there is one very significant exception to the limited liability provided by LLCs. An owner will be personally liable for any wrongdoing committed when acting for the LLC. Here are some ways you can be personally liable. If you treat the LLC as an extension of yourself rather than as a separate legal entity. If you fail to properly handle the payroll taxes for the company employees. If you personally and directly injure someone during the course of business due to your negligence. If you intentionally do something illegal, reckless, or fraudulent, and it causes harm to the company or to someone else. But the liability protection remains the main reason why LLCs have rapidly become the most popular form of business for the last 30 years since Delaware passed the first limited liability law. This structure has proven to be simpler and more flexible than other entities, especially the corporation. Let's go over some of the other features of an LLC. First, the owners of an LLC are called members. There isn't a restriction on ownership or the number of members. In fact, one of the more common occurrences is a single-member LLC. But members can also be other LLCs or corporations. This means an LLC can own another LLC. Some states require that certain professionals register as a professional LLC so that the public knows who the responsible professional is behind the LLC. LLCs also benefit from pass-through taxation and do not pay their own income taxes. The company income literally passes through the company to its members, who are then responsible for reporting it to the IRS and the state. For tax purposes, a single-member LLC is taxed like a sole proprietorship, and LLCs with 2 or more members can be taxed like a partnership. Multi-member LLCs even have the option of being taxed as a corporation by simply filing that election with the IRS. Because the LLC is a simple structure, it is fairly easy to form and to operate. First, you make sure the name you seek is not being used by another company. Formation is then done by filing articles of organization with your state's Secretary of State. Filing fees vary from state to state and range from $40 to $500. You will need a registered agent with a local physical address who can receive official paperwork for the company. Then, to maintain that registration, most states require an annual report to be filed. But operating the company is easier since the LLC can be managed by its members or a manager rather than by a separate board of people. One thing to keep in mind is that LLCs are not super attractive to outside investors. Venture capitalists typically fund corporations because they are less dependent on who owns the company. Once the LLC is created, the way it operates is typically laid out in an operating agreement. The agreement details the relationships between the members, the managers, the handling of profits, voting rules, how to transfer ownership, and what ending the company or dissolving it would look like. The operating agreement isn't mandatory, but many banks will require a copy of it when the LLC wants to open an account. LLCs are a great option for many businesses, particularly small businesses. Explore this option closely as you start your business or you want to protect yourself as your business grows. Thanks for joining me.